Hey guys, welcome to my YouTube channel. Today in this episode we will do a fundamental analysis of Dr. Lal Path Lab. So first we will understand the business, then we will go through the financial statements, and later we will see what are the positives and negatives in this company. And at the end I'll share my personal opinion on this company, whether I'm bullish or bearish on this company. So having said that, let's first start off with the business analysis. So Dr. Lal Path Lab is a diagnostic service company. Diagnostic service company in the sense this company provides very wide variety of testings to the patient. These testings ranges from blood testing, urine testing to the complex oncology, radiology kind of testings. The patients for this company ranges from a person who just want to do his blood testing so as to understand his hemoglobin level to a cancer patient who wants oncology testings. So this company caters very wide variety of testings to all kind of patients. So in total, it provides around 5,000 different variety of testings, which include both pathology and radiology testings. Now coming to its centers, Dr. Lal Path Lab has around 231 laboratories, 3,705 patient service centers and 9,247 pickup points. Now the way this company works is, wherever it is not possible to set up the service centers, it sets up the pickup points. Pickup points are kind of points through which Dr. Lal Path Lab provides services to the remote areas. Patient service centers, that is PSCs, are centers where a patient can directly come to the center and provide his samples. These are mainly located in metros, tier 1, tier 2 cities. Laboratories is a place where complex kind of testings are done. So this is how this company works. Right now, Dr. Lal Path Lab is the largest private diagnostic center in the country, followed by Metropolis and Thyrocare. Now let's see the geographical presence of this company. In the financial year 2021, 37% of revenues came from National Capital Region, that is Delhi. 29% came from rest of the north. 17% came from east, 5% from south, 10% from west, and remaining 2% from the other parts of the country. So if we see the geographical presence, we can clearly say that this company has a very strong presence in the northern part of our country, mainly in Delhi and surrounding region. Now, the other thing to notice here is, Dr. Lal Path Lab was started in Delhi in the late 1950s, and from 1950s to 2021, this company has still only managed to grow its presence in the north, and it is still not having a strong presence in the other parts of the country. The reason for this is, in this industry, it is very difficult to organically grow. Organically grow in the sense, this company cannot directly go to the south and set up its center, because usually what happens is, patients visit the centers which are in their place from a very long time, and also they usually have a bonding between the doctor and the center. Usually what happens is, a doctor recommends to a patient to go to a center, and in many cases doctor recommends only when he has a connection with that particular diagnostic center. So Dr. Lal Path Lab cannot directly go to the south and set up its center and expect to generate revenue from there, because it would be facing a tough competition from the local and a long established players. So this is the reason why the companies in this particular industry cannot organically grow. But this does not mean that this company cannot grow at all. The way this company can actually grow is through the inorganic way. So in inorganic growth, a company, rather than trying to expand its presence by its own name, tries to acquire the local players. So what it does is, suppose let's say a diagnostic center XYZ which has a very strong presence in the southern part of our country. So what Dr. Lal Path Lab does is, it acquires this XYZ company in the south, and then indirectly it operates the XYZ company. Now let's move on to the shareholding pattern and understand the distributions of share. 55.23% of shares are held by promoters, 26.82% is held by FIS, 5.74% is held by DIS, and remaining around 11.5% is held by public. So promoters are holding more than 50%, which is a good sign, and public is holding less than 15%, which is again a good sign. But guys, what I am recently noticing in the companies is, companies in which FIIs, that is foreign institutional investors holding is very high, are going down. This is because from past 2 months, FIIs are continuously selling the shares, and wherever they have a very high holding, like HDFC Bank, ICICI Bank, Bajaj Finance, so wherever FIIs are having a large holdings, they are selling their stake. So from this perspective, if we go through the shareholding pattern here, around 26.82% of share is held by FIs. So in the short term, we can expect a good amount of volatility in this company. Now let's move on to the financials and let's go through the numbers one by one. Starting with the revenues, from financial year 2017 to 2021, revenues have grown at a CAGR rate of 13.64%. So this is a good growth. So this is a positive signal here. Now coming to the net profits have grown at a CAGR rate of 17.55% from financial year 2017 to 2021. So again, this is a positive signal here. Now coming to the operating margins, the operating margin of this company is 26%, which is again a good number and a positive signal. Net margin is around 18.7%, again a positive signal. Now coming to the debt, this company has zero debt. So this is again a positive signal here. The return on capital employed, that is ROCE, is 29.5% and ROE, that is return on equity, is 23.4%. So both these numbers are very good numbers. So again a positive signal here. Now coming to the valuations, right now the market cap of Dr Lal Path Labs is around 28,500 crores. The share price of this company is 3,428 rupees. Book value per share is 148 and P of this share is 70. So from valuations perspective, this company looks to be expensive. This is a negative signal here. Now here, let's go through the positives and negatives in this company. So starting with the positives, the number one positive thing here is this company has a good track record in growing its revenues and net profits from financial year 2017. So this is a positive signal here. Secondly, this company's margins, ROCE and ROE all are good. So again, this is a positive thing here. The third positive thing here is the company still has a very large headroom to grow inorganically so as to capture the south, east and west markets. So this is again a positive signal here. The fourth positive thing here is Dr Lal Path Lab has recently acquired Sabanban company. So Sabanban Diagnostic Center is a very well established diagnostic center mainly in the Maharashtra region. So with this acquisition, this company would be acquiring the Maharashtra market. So this is again a positive signal here. The other positive thing here is the company has set up its new service centers in Bangalore and in southern parts of India. So again, this is a positive signal here. Now coming to the negatives, the number one negative thing here is this company is currently trading at a very expensive rate. The PE of this company is 70 and it is almost trading 22 times of its book value. So this is little concerning for an investor here. The second concerning part is the competition. Competitors like Metropolis, Max Healthcare, Thyrocare are all very good companies and these companies can give a very tough competition to Dr Lal Path Lab. So this is again a concerning thing here. Now coming to my opinion, right now I am neutral and slightly bullish on this company. This company can still grow aggressively going forward and also margins may still more improve in the coming years. So keeping these things in mind, I am presently slightly bullish on this company. I have included this particular company in the model portfolios, both in the safe player portfolios and in the risk taker portfolio. The main reason for me to include this company is with the inclusion of this company, portfolios would be getting a good amount of exposure towards healthcare segment. And also in the near term, I am expecting this company to give very good numbers. So this is the reason why I have included this in the model portfolios. So for people who still more want to diversify their portfolios can go with the Metropolis too. The reason is Metropolis is also a very good company from a fundamentals perspective. It is also growing very rapidly and it is also having a large amount of headroom from an expansion view. So for people who are looking for diversification can go with both Dr Lal Path Lab and Metropolis. This is my personal opinion guys. Before investing, please consult your financial advisor. Having said that, I conclude my today's episode. I hope this was an informative video. If you liked this video, then hit the like button, and if you wish to watch such kind of content related to stocks and stock market, then you can subscribe to my channel. Thank you for watching this video.